Hey guys, this is Derek, the host of the Wealth Watch Show. Just wanted to do a small little technical analysis tutorial on how I spot reversals either in the short term or long term, and what are some of the key things that required to be done, or key levels or whatever, um, that lets me know something is in reversal, and how I trade reversals. Um, and get confirmation. So that being said, here is by the way, this is a tutorial, meaning educational. So that means this is for educational purposes only and not meant to be used to entice you to trade or anything like that. And this is not meant you for to sell anything or buy anything. I don't give financial advice on the internet as your client. So that with that being said, we're looking at the micro E-mini NASDAQ index futures chart. I use the futures for almost everything, mainly because I trade futures as well as use them for analysis. But one of the things that I noticed is this particular candle here, right here, oops, right here, this little white candle here. And my candles are white mainly because that's just the colors I like. And it helps me to stay calm and collected when I'm trading. It's one of those psychological things that just help me. So, excuse me, that being said, if you notice here, the wick of this particular candle is larger than the body. So some people say, well, buyer stepped in and went up and we rallied to all-time highs, but then seller stepped in at the top here, at around 24 something, or 22 400 something, and then sold down here, so meaning that the buyers could not sustain those highs. And then we got this particular month here, and that was in December. um, and then we got this month here, which is I'm recording this January. I think it's the 16th. Nope, the 10th. Goodness gracious, January 10th on a Friday. If you see here, we just started this month, so it's only the 10th, meaning we only been in the new year for 10 days. So you see this price action here where, once again, the market tried to go up and, try to take out, rally, take out those new highs from last month and then continue. But once again, sellers stood in and stopped them from making those highs. And then now we're pushing downward. Now, to me, this looks like a reversal. It could be a reversal. We don't know yet until we get confirmation, on this monthly chart. But one thing about monthly candles, it takes 1 month for a candle to print. So for this candle to close, we got another, 20 some odd days. And so right now, what you're looking at is, I would say, premature data, unless you go further in. Now, one of the things about technical analysis and chart reading, things like that, it's all about prices and data. So fundamentals, when it comes down to futures, at least to me, is thrown out the window. And the thing about price is price. What does that mean? So you can see here, we're at 21.13, 21.12. The market is currently still open. It's 3:21. Um, when I switch this chart to a weekly chart, guess what? Price is still going to be at 21 whatever. Meaning, no matter what chart, data, or date range I pick, the price is still going to be that price. Changing the chart does not change the price. So why is that important? Because some people feel like, well, depending on what chart you're reading, what data point or date your range you're looking at, um, gives you more advances. And I would say not necessarily advances, but maybe more insight. And some people are like, well, insight is more of advancement. Well, that depends, because more insight can sometimes lead to the wrong decisions if you don't know what you're reading. So back to what I was saying. So we're back on the monthly chart here. So since price is the price, meaning price is fractal, meaning doesn't matter how far down in the charts you dig, it's still going to be that price. So now what do I look for when I'm looking at this and I'm saying, we could be reversing because we see that we tried twice so far and we're not making new highs. And then this candle here, this December candle, it's like, we're really close to the open of that candle. And then this month we tried and now we're downtrending and we broke under this candle's low for last month. So since we broke through that low, it's like, okay, well, usually in my mind, if we're going to continue to go higher, I would like to see price break through here. If you can't see my pen, break through this top portion up here from last month's candle. So this is what I would like to see if I'm bullish, for example. I like to see price go above this. If price were to go above this candle high, most people would be bullish. But since we did not, and we broke down here first, it's like, okay, well, that could be cause for maybe a small retracement since, the last couple of months, we had higher highs. All right, so let's dig down into a weekly chart. So remember I said price is price, meaning doesn't matter what chart I'm on, it's always going to be that price currently. But this gives us a more detailed view of price. So what does that mean? Well, now we have more data to work with here. So we have each candle represents 1 week. So now that we have more data to work with, now we can kind of dig into it and start seeing some details. And so we had this week here where, if you look here, we had this week here. Right here. I'm trying to make it. Yeah. So this week here we had what some would call undecisive. Why? Because the week prior, which is I don't know what Monday this is, the Monday the 9th of December, we took out the highs and the lows of the candle before it. So we made higher highs, true, but we also took out the lows. So to me, that's a little more of an indecisive type of thing. All right. And so now we know the market is deciding where we want to go. It's kind of bouncing around. We had a lot of economic news last month, and we also had the end of the year and et cetera. So the following week, we didn't close, or we didn't take out neither the highs or lows. And then the following week after that, not only did we took out the lows, but we had some buyers step in. And then this week, we finally took out not only that indecisive candle lows, but last week lows. And now we're making new lows on just in this small little weekly data range. So now it's like, okay, well, we could be reversing. I'm not 100% sure yet. So I'm going to dive deeper into the data. So now we got way more candlesticks, way more data to work with here. Now, what I'm noticing here is the ranges. And so if you look back on the monthly chart, the ranges are high, but they don't look drastic. You look here, the ranges, you got some range going on, but they're not super drastic. But as soon as you go to a daily chart, now you're seeing it's like volatility going up and down, up and down, up and down. So what does that tell me? Well, we made a higher high, all-time high, if I can get this, an all-time high here, which is great, grand. But as soon as we made that high, the next day we dropped off like a rock. This large candle here, from here to here, we dropped off like a rock, and that lets me know, well, that could be a top. We don't know. not 100% sure. Even now while I'm talking, I still don't know. We could, you know, do a couple of little retracements and then shoot right on up past it. I don't know. But I do see that we're doing what? Well, if you're new here, then you don't see it. If you're not new here, you more likely probably notice we're making lower highs and higher lows. What does that mean? What did I just say? Well, here we go. We have a high here, and we have a lower high and a lower high. Did I say? I think I said that backwards. I caught myself. Don't worry, guys. So we're making lower highs and lower lows. And people are like, what the hell did he just say? Yeah. So as you can see here, we're making a high, another high, but it's going down lower, 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 lower. And so when I'm starting to see that we're making lower lows and higher lows, it's like, you know what? We could be breaking down. I'm not 100% sure yet. Well, this is a, sign of a breakdown, especially if we're taking out the lows and not taking out the highs. So when we're taking out lows and not taking out the highs, people will say, what? That is going into a downtrend. If we're going into uptrend, we're taking out highs and not taking out the lows. So right now we're like, okay, we're in the beginning stages of possibly tipping over. But once again, like I said, we could easily go down, take out a low, and then go right back up. We could be making a head and shoulders pattern right here. We don't know. This could be the shoulder area right here. And then this is the head, and it could make another, who knows. We could come down here and take out these lows here and then shoot up. We could just take out these lows here and shoot up, who knows. I can't tell the future. That's the beautiful thing about being a trader, is speculation. But just bear with me for a second. Now that we know that we're making higher highs, not higher highs, we're making lower highs and making lower lows, let's dig deeper into the charts. See what I'm doing here? I'm doing what's called a top-down analysis. I went from the top and working my way down. So next we're going to the hours. I usually go straight to the 4 hour. That's just me. As you can see, some of my indicators here, you let me know session open prices, because that is important data, especially when you have that session open. Session open, London open, New York open, London close are important prices throughout the day. But that's for another tutorial. So now let's look at what we got here. So we got the lower lowers and higher highs, etc., etc. We missing some data here. So what I'm going to do is I'm going to go to the current chart for March. So this lets me know that at least on the short term, we are reversing. Why is that? So one of the things I've learned over the years is ICT. And this is one of the trade setups that I learned from him and his courses and things like that, that still is relevant today. I don't use it all the time, but when I see it, I definitely do use it. So when you're looking at the market making a high, and then it made a temporary low, and then it tries to make another high, and it did not make that high, what is this? A swing. If we were to take this chart and turn it into a line chart, what would it look like? A swing. There is if you look right here, there is a little U. All right, so that little U is important, and I'm going to show you in a minute why. All right, so let's go back to the bar chart. So when the market forcibly and drastically breaks this U or this swing low, when it forcefully and like a torrent just breaks that swing low and start breaking lows like crazy in a matter of 4 hours. This is a 4 hour bar right here. That lets me know that at least in the short term, we are reversing. Why? Because we failed to make a new high and we broke a swing low that, would have kept the trend intact essentially. And normally if you break a swing low, people are like, well, not all the time that doesn't work, because if you break the swing low, it could shoot back up. You're correct. But in this instance, the reason why I'm like, okay, this is definitely a short-term reversal. And I'm saying short-term because I don't know if it's going to turn into a long-term or not until, of course, we get some more data. But the reason why I'm saying that this is a short-term reversal is not just because of the fact that it broke the swing low. It's because how much volume went into that downward candle. How much volume went into that downward candle? So all these candles here, if you look at all these candles in the past, all these are 4-hour candles. You see the difference between these 4-hour candles and then this one candle? The difference is it took how many 4 hours, how many days for this one candle to wipe out all that price action. So that's why it's like, okay, we're definitely looking at a short-term reversal. But then confirmation. You might say, well, Derek, all right, that's one. So I'm not going to get in this trade here. Why I'm not going to get in a trade here? Because like I said, it could be a trap and, shoot back up. I need confirmation. And so some people will go ahead and get into it, just not me. So I need confirmation. What is my confirmation? It is the retracement. And so what I'm going to do is I'm going to put a Fibonacci and I'm going to snap it. We're going to have to go ahead and snap this bad boy. Let's do a strong method. And I want to see how far it retraces. And when it comes down to this range. So we're going to snap it and we're only going to do the body of the candle. And why the body of the candle? Is because that's where price is essentially. Candles with the wicks is essentially where price was. To me, the body of the candle holds more weight. And so if you see here, my retracements are different. They're not your typical retracements. This is also something I got from ICT a while ago, and it still works to this day. And so this candle here, because it was so strong and powerful, there was a lot of people, to me, probably not getting filled because of the sheer volume of movement. So if it does retrace, buyers do step in and someone is looking for an entry because they think this is reversal, where would they enter at? Where would they want to enter at? So as you can see here, 50% of this large volume candle is 21,876. All right. And so that's 50% of the candle. Some people might say, you know what? I'll take a 50% retracement. But my thing is, usually and most times, the retracement is in this range here. Let me take off that little snap. So the retracement is usually in this range here, the 62 to 69%. And as you can see here, anywhere in this time, I will be taking a trade and having my stop loss above this candle here. Let me take that off. So I'll have my stop loss above this candle here and take this trade. So you can see I'm not risking too much, but if the trade were to work out, you can see the potential. Now, of course, I'm going to give a caveat. All this is hindsight. Now, all of this is hindsight. This data has already been done, so it's easy to see these patterns when they've already been done. Now, the hard part is doing it and trusting it after it's been done. That's not on me. This is just a tutorial to teach you what I see when it comes down to reversals. Now, if I see this pattern here, the reason I say it's short term, because I see this pattern on a 4-hour chart. It's a 4-hour chart. So to me, that could be a temporary, a few weeks, maybe a month type of reversal. If I were to see this particular pattern on a chart like the daily chart, or in particular the weekly chart, especially the weekly chart, if I see that sort of pattern on the weekly chart, then I'm thinking more long term. Like, okay, we really are rolling over. And that's where I go in and do things on the investment side. And then, of course, on a monthly chart. And so, that's pretty much it. I don't know what I was going to say, but yeah. Those are some of the things that I look at when it comes down to reversals. There are a few more things that I look at, but, typically, that's pretty much it. And if you're wondering too, I want to show one other particular thing here. Let me turn this snap back on. I love the 50% retracement level when it comes down to oddball things. In particular, like you see here, we retrace 50% of this candle, so stuff like that I like because it gives me little entry points. So this really is for me for entry points on whenever I'm trading reversals or anything like that, for getting in if I missed the actual start of the move at the beginning. So that's pretty much it. All right, guys, I ain't gonna hold you too much. Thank you. Watch the Wealthwise Show or listen to the Wealthwise Show on Spotify, Apple Music, anywhere where you get your podcasts, and listen to us on YouTube as well. Like, comment, and subscribe on there, and follow us on Instagram and all that good stuff.